Okay, thank you, Steve. Hi,
Thank
Lydia.
you.
I'm making you the presenter now. Welcome back.
Good
How you
morning.
doing, Lyd?
I'm
Hi,
good.
how are you
How are
at
you?
Faith today?
I'm good. How are you?
I'm doing okay. So last time you were on, you correctly identified a 133.5 price level as very important resistance that the pound dollar had to get through to stage in advance to 560. It was rejected, made new
Right.
lows. So
Right.
great call on that area. I'm curious, as are all of our viewers, what your take is here. Is a pound due for another rally or a retest, or looks like we're in one of your fib zones here?
Yes, yes. So, I think it's due for another rally. Was
Okay.
actually looking to see how far, if we could stay below $1.30, I think this past week. And we did it and all actually found support. And drill right down into 240. We actually found support a couple of times right here at this 50. So sometimes this gets confusing. I know you guys can tell. We did this, so we had this rally to 132, came in lower, and that was after the rejection at 133.50.
Right.
Grinded all the way to 29.5. Had this rally, but that was a 618, and so we got rejected lower. So this fib here, let me know that if this fib, the larger fib here, was this a corrective rally? And we would see, we would move, we go back to that weekly chart, we would move right into the 61.8 at 129, which is actually what I was waiting on, was just a move to new lows and to see if this would be the level that we were going to hold or to break. But instead, what we got was a hold here. And we tested 130.80 a couple times last week, several times last week, as recently as Friday, and we ended up closing it back above 131. So I'm of the mind right now, my bias to the upside. I think we break above 132, which breaks this fib for a return, and like you said, a retest to 133.50. And you all know it's 133.50 to break or hold to determine if we finally get a correction of this down wave. Just know that when you're trading cable, we have to correct this. We have to correct this move at some point. Cable always corrects. Even if we go on for however long we go on in the one direction, grinding and not really making fib corrections, cable always corrects. So I'm just waiting for this correction to finally take hold. And, to be repetitive, we need a break and hold above 133.50. I think we're on our way.
Is that always correct? That this pair always corrects, kind of distinct from other pairs, that you could always count on prices correcting more in cable than, say, for example, euro?
I think all instruments correct at some point. Right. So because I've been looking at this for so long, I just have the confidence that we're going to get a rally, right? You just can't be too overconfident. So like when we got to 133.50 a couple of weeks back, I was holding for a move to 130, this 135, which is now the 32. So you get overconfident. The trick is not to get overconfident, because you never know when is that going to happen. Will the market break or hold, right? So you don't get. I didn't end up getting the entire move. I had to come out, on a correction.
You see a different nature of trading during the summer in cable. Does the quietness make it more technical or less?
Actually, I think the quiet makes it more technical. I think though that it just comes more unexpectedly, right? So you're during, I guess during when it's not non-summer months, we just came to get moves a little bit more frequently or fluidly. Like I think we would have gotten a correction of this move a lot sooner if we weren't in these summer trading months. And so you tend to get the grinds, you get to get the chops, and you get to get days where it's like the markets are sleepy, they're just not really moving at all, as opposed to being more or less technical. You're just not really getting swift movement. So for swing traders, we have to just be more conservative in our targets. Like I said, I should have had an exit at 133.50 as opposed to waiting for the correction into the 38.2 fib, which at the time was 650.
So take what the market offers you during that type of time frame. Lower your expectations for objectives, maybe from 100 pips to say 60.
Yeah, really just trade level to level. You know, when we hit those levels, respect them as much as the market, you know, respect them with the full expectation that the market likely will too. And there's a couple of examples on some of these crosses where the levels have been holding, and it's just important to respect the levels during these summer months.
Do you think that Carney moves this week, Lydia, and is, as Stelios was saying, at least part of it priced in? And if they don't do anything, there could be pretty negative downside action in cable?
What is this? This is August, right? Yes.
Yeah, they meet this week.
We should get a, yeah, they moved this week, but we should get the inflation report today, this week as well. Or is that coming in September? So they tend to move around that, or the kick is the kick it towards the, well, we wait for the inflation report. I think, I'm not sure if Carney moves, to be frank. I don't think that, I think that the developments in Parliament and in Brexit may have put the skids on that. But I wouldn't be surprised if he did, because you know, one thing central banks like to try to keep is their credibility. And since he's been signaling that all year, it might move for that reason. And I think, yeah, it's priced in. So traders should be careful not to get a huge reaction, really in either direction. And whatever the reaction is, watch the levels. Watch the levels. I have no expectations of the Bank of England right now. I just think everything is mired in Brexit, and anything they move, it's because of Brexit. If they don't move, it's because of Brexit, right? So,
you know, I even read something real strange, Lydia, that they're preparing their military for a hard Brexit. What could they possibly fear? The French and Italians usually give up right away. So, do you know what they're worried about?
I have no idea what they could possibly be worried about. Given their geographical position in the world, I don't think the EU is going to turn that much against them. But,
a little paranoia going on there in the UK.
I think all of this is driven by paranoia of some sort. And I thought that, I mean, that's talk about an overreaction. But we'll see.
I don't know. I thought maybe they did it because of Trump's visit. But how about Stel, if you're still here, did I miss any of the fundamental angles that you may want to address with Lydia coming up here? I guess he's not here. All right, Lyd, why don't we move on to, say, Euro Pound, threatening the upside of the range for the 1 millionth time? Is this it?
It's likely not it, because it's still summertime. But I agree that this thing is moving higher. Weekly chart doesn't show as much, but these ranges that we've been in. But this is more of the look that I've been watching. This move, this fib move that hits the 123, and as expected, once you do that, we turn over again and drawn another fib. This is that move there to that 89.50 area. And actually, if I can just back, we've come here into this 89.50 several times and have turned over. So this is really the probably the range extreme.
Yeah, the bear, they call it like the Bears' last stand at 89.43, 89.50.
Yeah, I'd say so. I think if we could break above here, we'd have a nice move into 80 to 90.50, which is probably, you know, the kind of the extreme tops here. So 89.50, which is probably, to me, a range extension from where we were, where we've been sitting. It rightly turned over, likely because of resistance and, you know, the fib extension target hit. And then we turn into here. And yesterday was, we found these lows, really the 618. we got a break here. We got a nice bear trap here, below 88.70, and now we're moving higher. To me right now we're in a fib move, but it's the euro pound. It's the summer.
Right.
The ECB didn't give us much. Didn't give us too much. I mean, we saw the euro roll over a little bit, but not much. And so this was my hesitancy. While I was in at 80 at the 50, you know, I had my stop really closer to below 88.60, and I think that was mentioned as a support level. Just because we had the ECD, I wasn't really convinced with the market reaction to the downside. It looked to me like a buying opportunity. So I expect that we'll get this rally to grind back towards the highs at 89.60, 89.50. And I'd like to see a break and hold above that to get us back to the next target at on the daily chart, which would be the 90 to 90.50 level.
Okay, so it's had a nice little grinding advance in the face of a sideways dollar. So could this be, if we do extend to higher levels, like you're talking about, be more about Brexit fears, cable weakness than euro strength?
Yes. Yes,
okay.
That's what it would be actually. Because if usually the euro drives this pair, but what we've been finding is exactly that. Despite the weakness or the strength in the dollar, we haven't seen the euro pound break lower, which is really an expectation, especially when we broke down to 86.50. So yes, that would be exactly right. And I think, again, the market reaction actually might be more distinct here in the euro pound with the FOMC, and then right after we have Bank of England. You might get more of a distinction, more of a move here in the euro pound, especially after months of grinding, than even in the pound dollar.
Yeah, a lot of compression built up.
Yes, and really basing too. This is like a huge base over a course of several months. Almost a year actually. So if we take off to the upside, we could really see a nice move higher.
Yeah, I'm thinking new highs for a third drive on a weekly. Just a Nostra Pinkert call.
Good. But, I'm positioned that way.
yeah. So I know you were also skeptical last time we talked about U.S. dollar yen strength, yen weakness. And so I'm curious where your head's at on Guppy now that the yen has come off about 300 pips from its recent high, 200, 300.
So I'd like to see, I actually like to see it move a little bit lower. I'd like to see it move a little bit lower into 140, really 143, the new low on the weekly chart. Still maintaining the area, but I still like us to move a little bit. I think we can move a little bit lower. We have a failed high above those 148 level. And so that should move us a bit lower into 143. Also, we have a break of this fib. So kind of the same thing with cable. When we saw this move here, we had this right into the fib, but we got a failed low, which, said when I think last time I was here, we said we're going to get a move above 148, but watch if it holds the fibs, which it did. And so now we're turning over. And so I did the same thing. Okay, it was just, but in this case, it broke the 61.8. And so that for me is a signal that we're going to return to these lows. So I'd like to see it move a little bit lower here. You see we're finding kind of resistance underneath that 618, but also kind of these other candles, the lows of these candles, and we're kind of finding some resistance here. I'd like a move right into 144, 143, these lows at 143.75 or 143.50. And then watch to see if this low, 143.20, holds. Like according to the weekly chart, we should get a bit of a move lower, and it doesn't have to be an extraneous move like 140 or even it could be 142.50, it could be 143. So I don't think that it's going to give us a huge trending or swing trade lower, but I do believe that we are going to come in and retest these lows before we see if we get a move to the upside. We're headed lower first.
Same type of picture with cable against the commodity currencies?
Actually, I like the commodity currencies higher, so I think that the commodity currencies are showing a lot of weakness. I think we've seen them lower because mostly due to the pound weakness. But like I see well, the pound Aussie here we're looking at. I see the pound Aussie moving higher.
Okay.
Same kind of thing on all these weekly charts, these failed highs. Not really like, so we got these nice moves earlier in the year, and we haven't been able to return to these highs. And then we get this kind of backing off. But here, again, level to level, this one came into 175.71, which are these former highs back here last year, the spring of last year. It's been a serious support level, actually, as we've been moving lower. Even here, we got a nice little bear trap and came right back above this kind of doji candle right at that support level. We hit this a couple of weeks ago, same support level. Now we're turning higher. This is a better look at it. So really, because we are not, so again, if we look at the daily, this is kind of, we're not getting back above these highs after this failed low. So I would like to see a move here. Otherwise, if we test back around these lows again, test this support level, this will be a more ideal entry for buyers. And so you want to watch the support level, which is a formal resistance level for entries. I think right here, we're kind of in no man's land. I wouldn't take in either direction really at these levels right now. If you want to see if we can get to 180, or we want to really see a retest and where you can pull a trigger on a buy. If we break, you want to see if we get a retest that holds, and you might pull the trigger there on a low.
Okay, so were there any other currency instruments you want to cover? Because I have a question for you, stock market related.
Okay. Let's take a look at the KUU just because I just in this one. So I actually think that this is is bullish, a bullish pair. Same thing. All the weekly charts are looking the same right about now. But if we just drill down here, this support level, this 92.60, is actually at this 50% fib of this kind of rally higher that really has failed. So we should get a move. We should have gotten this move to the downside, which we did, and we've just been holding. So I mean, I really was too of the mind that we were going to move actually back into support, because we had really essentially way back here, if you guys can see, we really had a failed high, and we should move lower than this correction low, which would bring us back in here. And we've been finding support at this support level for a couple days now, all of last week. So we're here testing these highs, testing these lows again. If we come off, watch just to see what happens into 192.70. I think 100 pips from where we are is a typical move for Kiwi, and I would be watching this, kind of this area here. And yeah, if we break below 91.50, then I would say again, next level we want to look at is 89.62. But yeah, I think here right now, until we get a nice hold below this level, we've had a lot of tests of this level and a lot of tests of 93.50 to the upside. So a very small little range here. And I'd actually like this to move higher.
Okay. All right. So I know you're a registered investment advisor. Mm-hmm. So I know people are probably asking you, clients, with what happened in Facebook last week, and and what happened in Netflix the week before. Mm-hmm. And then Google did very well. Amazon had blowout numbers, but ended up, after being sharply higher, closing lower on the day. What's your view with what's happening with what has been market leadership, the FANGs, and what are you telling clients to do in this environment? Keep their powder dry?
Yes, that's funny. So I just talked to one yesterday evening who is adverse to holding cash. So if we get out of this and I have a bunch of cash, what should we get into next? And I said, well, we talked about some ideas, but I told him it's good to have cash so that you can be in a position to pull the trigger when it's time to pull the trigger. I mean, we might see anything develop for a couple months or, till the end of the year. So
Right.
I've always been kind of skeptical on, I've been skeptical on equities probably for too long, maybe. I got with the program, we got above 2,800 up here. I mean, it's a technical move. So if we break into new highs, I'm a technical trader. I'm not gonna, look at this and be a contrarian. So, but I've not been confident to move large amounts of new cash into the markets either. To me, the market leadership is all correcting. And what I would say, because we're dealing with stocks, that you really need to look at the fundamentals of the company and see if there's a real driver for the price action that we're seeing. A lot of cases not, and in some cases we might be. Also,
I would interpret your client's reaction to getting out, but what do we get back into? That people think that, and that's really the way the market's been behaving, is people don't get out of the market, they just rotate into a different sector. And it's like there's not even a concept of being in cash or having a portion of your portfolio in cash, which to me says there's still an awful lot of complacency in the market because people still have FOMO. Okay, they'll sell the high flyers, but what should we buy instead of standing aside? Don't you view that as a bit contrarian?
Yes, I do.
Okay.
And so I've been doing a lot of educating because I believe that.
So thank you later, Lydia.
Place to move large amounts of cash, but yeah, I think the market is correcting. When we look at individual stocks, I think individual stocks are correcting. I mean, if you look at Facebook, it's really just a fib move. I mean, it's a 618 move. I think it's below, but it's basing. I like your guys' island. I like that island. I would say, oh, I learned something today.
No man is an island, Lydia. All right.
So I learned something today with you guys. I never knew the island pattern formation.
Oh yeah, it's in Edwards and McGee. But that's when you have people trapped and there's no way out. It's kind of like the TV series Lost.
Oh, I see.
Where they're on an island and they can't get off. And yeah. All right. So why don't you show our audience your website and the different things you do and how they could reach you?
Sure. So
that's a new design.
Yes, it is.
Nice.
I'm happy with the blog.
You have a green thumb too. Look.
This one looks better than the one in my car, but I also have this cactus in my car. Same pot and everything. Interesting. So Learn with Lydia is really the mentoring program and the coaching that I offer traders, new or experienced alike, just depending on where you're at and what you're looking to, what your goals are, with having someone hold you accountable and kind of teach you through the markets for a period. Invest with Lydia is where you find more about our investment advisory services. And how we can help you there. And you can shoot me a message here on the blog. We'll come to eat via email, or follow me on Twitter at F.A.C.E. I know a lot of you are trying to look for me at F.A.C.E. FX. That account is closed. I mean, I have it, but I'm not that. You won't get anything from me there. So follow me on F.A.C.E. And you can find me on Twitter, a little bit on Instagram. I'm trying to post some things there too, a little bit. You can find me on Facebook at FM Capital GRP or FM Capital Group. The firm's on Facebook. We have a Facebook page there. Yeah, and just follow me. And I post the articles or the analysis here on the blog. Usually broadcast that on all the social media channels. And ask me questions. I answer as best I can without giving away all the secrets, because so that my clients and my students still receive the high value as well.
Okay, Lydia. Well, Besides following Lydia, I hope that a great trading season, summer trading season, follows you and your clients, Lydia. Appreciate you being with us again today and the clarity of your important technical levels. We'll be paying attention. Good hunting, my trading warrior sister.
Thank you, Dale. Thanks, everyone.
Okay, Lydia. Adios. Remember, everyone, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. And we're going to have, I believe, Trent and Justin from Forest Park FX. So get your technical questions ready for, what type of account would suit you the best, because they'll have the answers. So with that being said, see everyone tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios. Thank you, Lydia. And see everyone tomorrow.